let's look at how debt can wreck your retirement. And we just chose 6 of the issues I see time and time again for my saver clients. So let's take a look at these 6 items. So first of all, the first item we're going to cover is literally the overall impact of retirement. You see, retirement, as I've said time and time again, is all about cash flow. Money coming in the front door and money going out the back door. So think about this. When you get in retirement, you don't want a lot of uncertainty. You want to know exactly how much money you need to spend on a regular basis. That's because it's expensive in retirement, not just with inflation, but taking money out of these tax-infested retirement accounts. So if we have debt, that means we're going to have to take even more money out every month, pay the tax, just to service the debt. So overall debt, especially if you have a lot of money in a 401k or IRA, is very costly to service. Number 2, tax implications of debt repayment. Now, for instance, this has at least once a week. Someone will came in yesterday, a couple. They're already retired. They have these large 401ks, but they also do not want a house payment. In fact, they said their interest on their home is about 7%. And he said, yeah, we can afford to pay this on a monthly basis, but we don't want it. So he entered through a buyout through a local company. So he wanted to start drawing a large sum out this year to pay off the home. I said, this year would be a terrible year. You're going to be in a 22% bracket. Let's wait till next year. So our team of tax certified specialists will look at that. We'll make sure he pays off that home, but we want to make sure he pays it off at the least amount of taxes. This is a free service we offer all of our clients, things like this. Good versus bad debt. Folks, debt is not necessarily evil. There's what I call good debt. That would be like debt on your home, assuming the interest rate is, something that's realistic. Sometimes certain use assets, we tell people to borrow money for cars all the time if it makes sense from a tax standpoint. They're usually assets that what we say you get use out of, or hopefully they're appreciating in value. Bad debt, the obvious choice would be a credit card. You rack up a bunch of credit card debt, buying clothes or trips or whatever. That asset now theoretically gone, and you're stuck with debt and interest, especially if that interest is sky high, not good. Next, strategies to reduce debt. We are very well versed in retirement planning, folks. Retirement planning is more than just slapping your money in an annuity or running to a dinner seminar and buying stuff. I mean, folks, that's not retirement planning. That's just purchasing products and hoping for the best. A retirement planning specialist is trained in cash flow, debt service, how to keep from running out of money, which assets to pull from, which to not. And this is a huge issue, is what is the strategy going to be if you want to pay off debt, how to pay off that debt with the least amount of taxes and not affect your overall lifestyle. Next, we have the role of emergency funds. Folks, you've got to start building up savings in after-tax accounts. Again, many of you are coming to me, you're retired or nearing retirement, you got $5,000 or $10,000 in the bank, and you got a $500,000 401k that hasn't been taxed yet. This is not good. You are not tax diversified. So some of you need to back off those 401k contributions and get those savings built up. Now, don't run off and do this without talking to us. But this is what we're going to look at. We're preparing you for retirement, but we need more after-tax savings to deal with the things you're going to come up with. And finally, the effects of liquidating 401ks to pay off debt. This is a huge decision. And with taxes expiring at the end of 2025, I would encourage a lot of you, if you're thinking about paying off or taking large sums out of those tax-infested retirement accounts to pay off debt now, you need to consider doing it now. Because my concern is, after the laws expire in 2025, we don't know what they're going to do, but down the road, if these tax rates keep going up, then you decide to pull money out of these tax-infested accounts, the government could hammer you with huge amounts of taxes. So I hope this has been helpful. So here's the moral to the story. If you have debt in retirement, or you're nearing retirement with debt, and you're trying to figure out how to pay it off, should you pay it off? If so, where are you going to drag that money out to pay it off? We need to talk. My name's Tony Walker. I've done this for 40 years. We know what we're doing at Tony Walker Financial. We are retirement planning specialists. Love to talk to you at no cost or obligation. So to take advantage of that free phone call, all you got to do is log on to TonyWalkerFinancial.com. You're going to click on that Let's Get Started button, and we will arrange a free phone call with myself to discuss your situation. If after that phone call we think we're going to be of help, I'm going to meet with you in person. That's right, free of charge, no obligation. We can do that at either our Bowling Green, Louisville, or Lexington, Kentucky offices. Internet not your thing? No problem. You can call us 24/7 at the toll-free number of 877-499-9255.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.